Good morning, folks, and welcome to this morning's video. So this morning I have two pairs on watch, and those are Euro Aussie and Aussie Swiss. I very nearly took a trade on Aussie Swiss yesterday. I was trying to set an order. I didn't manage to get the entry, so then I did something else and that didn't trigger. But I'll talk about that when we get down to Aussie Swiss. Just looking for something slightly different from that today. So my favorite of the bunch is Euro Aussie. So if we zoom out to the higher time frames, we can see that we are at a standout low where it is likely, doesn't mean it will, but it's likely that sellers will be getting out of their positions. Okay, we can see it on the weekly. We can see it even on the monthly. Okay, we can see this low even on the monthly chart. So that is a low of great significance where I would anticipate sellers getting out of their positions. That doesn't necessarily mean it's going to reverse to the upside. It just means there will be a lot of sellers getting out of their positions, and we can use the price action that forms to determine whether enough of the sellers are getting out of their positions and buyers getting in for us to capitalize on a potential move to the upside, or whether we need to wait for a sideways consolidation because price may be seeking volume from down here, for example. Okay, we're just reading the price action. So at this moment in time, what I'm looking at, if we just look at this on the weekly, I am aware that we have this wick above this candle, which increases the likelihood of this moving to the downside if it was to close like this. Okay, but this is the weekly candle and it hasn't closed. It's only Wednesday, so a lot can happen in between, but we are at this significant low. What do we know about these significant lows? We usually, if we're going to move to the upside, we usually break below. Okay, so if the I'm looking to get long on this today, but I wouldn't be surprised if we push a bit lower. If we are going to move to the upside, I wouldn't be surprised if we push a bit lower before breaking back above this, because of how significant this low actually is. Okay, and one of the reasons that this is higher up on my watch list is because we're at such a significant low. Okay, we are if we were to break above this, we will be well positioned for a move to the upside potentially. Okay, so you can see we've broken below the area of value. We have, if we just measure it, so we have this impulse here. We know that the leg out of an impulse correction continuation tends to be of a similar length. Okay, we've fulfilled that. I am mindful though, because we have a lot of volume here. So if we measure this, so what I'm doing now is I'm measuring. So we've got this structure here, all of this. Okay, and if we measure the height of that structure and we assume that the leg out is of a similar length, we've kind of fulfilled that as well. So if you look at that, that lines up perfectly. So we could potentially reverse from here. But because all of this has formed underneath all of this, okay, this could be a short-term move just to take us up to here, and then potentially maybe we retest there, or we break below and we start forming something like this, and then we get more of this structure. Okay, when you've been doing this for a while, you see these things pretty quickly, and the longer you've been trading, you see them even more quickly. So just factoring in all these things. I'm not just saying to myself, yep, we're at this low, buy or sell. That's not how it works. You know, a trained monkey could do that. So okay, but anyway, we've broken below here. You can see we had an impulsive candle. Often, if we are going to move to the upside, the last leg does have momentum, so that makes sense. Okay, and we also have a reversal structure. Okay, we have a reversal structure which is parallel. We can kind of separate this structure as one piece of its own, and you'll see this a bit more clearly on the 1 hour chart. We have a first drive, second drive, and just seeing this as potentially the move back above here to complete this structure, because we also have a near miss to the high. Okay, and we know that, you know, price will often gravitate back towards a high which it is near miss too. So that makes contextual sense, and just seeing this as the middle section within all of that. However, one thing that stands out to me, and this is a bit more clear on the 1 hour chart, we impulsed down here, but then we've kind of corrected our way, corrected our way down from there. So potentially, right, we have a consolidation here. Potentially, we could get something like this, okay, where this becomes a bull flag, because we started correcting here and then maybe we push lower from there, okay? And what I'm doing now is I'm just zooming left just to see whether that makes any contextual sense. Well, at the moment it doesn't, because that would not necessarily be enough volume to take price all the way down to this low. Okay, so at this moment in time, I'm not seeing that, because price needs to build volume for it to get to A to B, and it needs to have built a sufficient enough of amount of volume, which is why I'm not going to be looking to get short on this today. So what negates that? Where does the sell idea become invalidated? Well, if price started to correct here, then if we break above that, we would likely be above this area of inflection 2, okay, and we would not be if we broke above here, we wouldn't be potentially retesting the back end of that, which is why we might get that bear flag that I was talking about, because we could potentially be retesting the back end of that. So where does the sell idea become invalidated? Well, in my experience, it's quite simple. We wait for a break above this area of inflection, okay, this AOI. So I'll be looking for an impulse up above the area of inflection. This is what out of the things that I've drawn this morning would be most likely by the end of the day. Okay, and what an impulse up above here, and then I would be looking for either a 3-touch 15-minute continuation, or a 2-touch 3-minute 5-minute continuation, a 3-touch 5-minute continuation, or a 2-touch 5-minute continuation with a 3-touch structural approach. And if we got that, I would get long with a reduced risk entry on the break. If we got the same thing on the 15-minute chart or above, then I'll be looking for an entry on the break, but also an entry within it if I could get it, okay? And then I would be able to manage this up to this first inflection point. I don't think this holds any weight at all, really, but just because it's would be the first inflection point along the way, I'll be able to manage it there for 3.2. And then what I would do, you've seen me do this multiple times, usually on the flip side, I would measure from the range. And then what do you know? The 90% mark falls just below this sharp move there, where price often pulls back deeply. So in this instance, I would set a take profit at the 90% mark. Okay, and then I would trail my stop loss accordingly for something in the region of potentially 6.5%. So that is Euro Aussie, and I have an alert set just below the area of interest to see if we push up to that, because if we do, there's a strong chance that we're going to break above that. And if that doesn't happen, then I'm just going to leave this pair alone. That's how you mitigate FOMO if you're that way inclined. That's not, for all my strengths and weaknesses, FOMO is not something I suffer from. I have been, one of the reasons I'm looking for these 2 touches with a 3-touch structural approach is because my data is showing me that in a lot of instances I have been getting in slightly too early, but it's not out of FOMO. It was actually just because I didn't actually notice a pattern within my trading results. Okay, so one of the things you'll see me do now is looking for a minimum of these 2-touch with a 3-touch structural approach. But just to touch on it, when I'm in profit by 2% for the month, I will then allow myself to take the 2-touch flags, which you previously saw me illustrate, which I previously had on my charts, which would be without the structural approach. But that, according to my documentation, would be an example of a higher risk position. So my rules are that I don't take higher risk positions until I'm in profit by 2% for the month. And since I've only taken one trade this month and I'm currently down 1%, which was in retrospect a higher risk position, I will not be taking those at the moment, just a minimum when I'm looking for flags of these 2 touches with a 3-touch structural approach. Hopefully that makes sense. I'm going to move on to Aussie Swiss, and when we get down to the lower time frames, I'll talk you through the entry which I didn't take, but which I nearly took. Okay, so on the higher time frames, we have broken above this sharp hook point here. If you look at all the way down there, the sharpest move along the way down, with the exception of this, but that's the start of the move, is here. Okay, we near missed to that, so that's likely where price will gravitate back towards. We also have the near miss to it there. We then tap into it, but this is what I was saying a minute ago. These higher time frame liquidity points we usually pierce above by a bit more, so it's no surprise to me that this didn't commit. We then fully broke above here, and then we see the aggression to the downside, okay? Because we have to convince the market it's going the other direct. For people to make money in this game, most people have to, or most of the orders have to be people have to be caught out. Okay, so the buyers were well and truly caught out there, and then we completely capitulate to the downside. And now I'm seeing this is a potential impulse correction continuation to push lower. If we do what we normally do, which is measure the impulse, and we assume the continuation leg out of all of this would be of a similar length, mathematically that lines up actually perfectly with this low here. Okay, I've just cut through this wick because on multiple time frames it just appears as a wick, which implies that it's volatility, which implies that it's not indicative of the sentiment of the market. Okay, so what's happened, we've broken below this low. Okay, we haven't yet fulfilled that move that I just measured. Okay, which gives me a clue that this is potentially, because we're correcting below this low, an impulse correction continuation to push lower, which would also take us down to that area there, which also makes contextual sense. You can see that yesterday we had a doji candle there. What does that mean? Indecision. That means we'll likely move sideways. What happened yesterday? So we did push down. There was an entry you could have taken, but it would have definitely been higher risk. Okay, but we reacted from the low and pushed back up. Why are we pushing back up? Well, we have a bearish wick, a bullish wick here. Okay, a lot of the time these bullish wicks get filled. Is there any reason for it to be filled? Not necessarily. Okay, but we do have one thing I am factoring in is that we do have. So we have this kind of completed structure there, but sometimes what price does is it comes up to give us a double top before the drop. Okay, especially on these more corrective pairs. There is a hook point there. I'm not too concerned about that at this moment in time because it's sat above this low, so it's not as relevant. However, if we measure the range, okay, that high which is sat above is less than 50% of the range away. So in these instances, when I'm looking for if I'm looking for an entry from here and I'm looking for a push down and a flag, I don't take a 5-minute entry because we've got that sat just above. Okay, I always wait for a slightly more deliberacy. So this is the high of the structure. This is the sharp move which price is gravitating back towards. One of the things to note is that these moves here, none of them were particularly sharp. Okay, so it's no surprise to me when we broke above that we didn't fully commit, although that's not necessarily when we've got a clean piece of structure, but just a little observation there. So yesterday, so this is not a trade. I've marked it as a trade because I was going to take it. I didn't take this as a trade. If I had, it would have likely been a break even looking at this, or you may have been able to squeeze at a push. You may have been able to squeeze 1% out of this. But what I was looking for here, if we just put that away for a second. So what happened was price came up to this area. Okay, we had, once this candle closed, I was looking for entries. This one here on the 15-minute chart, I dropped down. Okay, this candle closed at, when did that close? That closed at 7:15 a.m. Okay, I wasn't convinced by that because the difference is, right, this, if we just look at the 1 hour, this is an important lesson actually. This is a bullish one. This is just one candle. Okay, this is not a bullish move. This is a bullish candle. Okay, on the 15-minute chart, this is a bullish move. Okay, so when we have a bullish move, I don't look to get short after a candle close like this. I either wait for the 1 hour close, because then you might think, well, it's still a bullish move on the 15-minute chart. Well, yes, it is, but the 1 hour chart holds more weight. So if you have a 1 hour retrace or a 1 hour high test, and you're back out on the 1 hour chart, this overrides the price action on the 15-minute chart because the 1 hour chart holds more weight. So therefore, for that reason, I wouldn't be looking to get short here because potentially, because this is a bullish move, we could get something like that. And one of the reasons that I was waiting for slightly more deliberacy is because, yes, this is Aussie Swiss, but look at these wicks. Wick, 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 bullish wick. There's quite a lot of bullish wicks within the structure. So I'm not just analysing the structure just because it looks very clean. I'm also analysing the fact that we've got a lot of bullish pressure here. Okay, so it's more risky. More likely you'll be tagged in and tagged out. So then the next thing I was doing is I thought, okay, right, I'm going to take a 1 hour close. I'm either waiting for a push down and a flag on the 15-minute chart, which we didn't get, okay, or I'm waiting for a 1 hour close. So I was waiting for this candle to close. That's a doji. That's not an entry candle for me. Okay, but we'd wicked above, lightly pushed top, taken out a lot of the orders. Then I was waiting for this candle to close and retrace about 50% of the length of this candle. And then I would have, what I did is I would have set the entry just under the break, and then I would have been able to manage this down to the low of the structure, okay, which was here, okay? So we're risk managers. I'm always ascertaining whether I can manage the risk, okay, not how much money I can make. Okay, so then this candle closed all the way down here, which would have meant that I would have had to have my entry just under the candle here, which would mean I couldn't manage it to this low. Okay, I couldn't necessarily get my risk off the table before price reached that low. And you can see price did react from that low and then pushed up. So I probably, given my schedule, wouldn't have been able to manage this trade. So what I did is instead I set a limit order. Okay, when price gives us a candle like this, it will often pull back 50% of the length of the candle and then continue in the forecast direction. So I set a limit order here. Okay, it didn't trigger, and then price started to move down, probably around here, I just cancelled the order, because if it pulls back that far from there, then it's likely not what we think it is, and it's probably pushing all the way back up to here. Especially as we've kind of hit the 90% rule of this structure. We know that the 90% mark is where price can pull back deeply or do something completely different, which is exactly what happened. So I took the order off that I had set, the limit order that was set there, and then there was no harm done. No harm done, no money made. It was just I was just managing, my entries and my risk, as I always do. So what I'm going to be looking for from this pair today, because we're gravitating back towards here. So I'm just going to move that. It's not a trade, as I said. It was just, I've marked it as trade because it was going to be, but obviously it never materialized. So what I'm looking for now is I'm looking for price to tap into the area of value, the sharp move, and then I'm looking for a push down and a 15-minute continuation, a push down below the area of interest, because this structure is not typical. Okay, and what I mean by not typical is that if this is the structure and this is now the middle section, then the middle section, as I've mentioned previously, we don't normally have like an impulsive middle section. Okay, you see these things after you've been doing this for a while. So when I saw the impulsive middle section, I actually thought it was more likely that we would get something more like that, because when the middle section is impulsive within a structure, what normally happens is we get a 3-touch structural approach, which has a corrective middle section within it. Okay, it's something I've noticed more recently. Okay, so I'm not necessarily anticipating this shaping up by the end of the day, just because of the makeup of this structure now. Okay, but if it does tap the area of value, what I'll be looking for, because of the slightly unusual makeup, I'll be looking for a push down below this area of interest. Okay, so and then I'll be waiting for either a 3-touch 15-minute continuation or a 2-touch 15-minute continuation with a 3-touch structural approach, and then I would look to get short on the break or within it. So I won't be looking for a 5-minute. And another reason why I won't be looking for a 5-minute is because if we measure this, as I said, we have a hook point sat just above, and it's less than 50% of the length of the range of this away. Okay, if we just measure that. So if that happens, then I will be able to manage it likely down to here for something in the region of 3%. And then my target, if we just measure, I know it's gone slightly out of view, but we measure the range, the impulse down to the bottom of the correction, and we measure it there, that would take us down to this area. And that would also be the 90% rule of, if we measure this structure to there, that would just about be the 90% rule of that, where price could pull back deeply. So if we just look at this on the 4-hour, you can see that's all a wick. That is solid bodied price action, and the rest of it is just a wick. So I would set my take profit there, and then I would trail my stop loss down to there for something in the region of 8 to 9%, and that would fulfill that impulse correction continuation. Whoops. So that's what I'm going to be looking for, folks. I'm going to run out of time on this video, but I hope you like the thought process. I hope it's provided you with some value, and I hope the recap on the trade that I didn't place was also useful to you. And I'll see you again in the next video, and I will of course update you if I actually place a trade. Thank you very much for watching, and enjoy the rest of your day.